Welcome to the May 14th, 2018 Advance Report for McGowanGroup Asset Management clients and NetWorthRadio.com listeners. Thanks for tuning in to our YouTube channel. Be sure to tell your friends. I'm Spencer McGowan, the Financial Weatherman, and we're going to cover what's on the radar this week. First, two industries are starting to lead. Now, technology has led for quite some time and makes up a huge part of the indexes right now, which is a danger sign. What category is relatively inexpensive based on value? Well, it is energy, and this week it was underscored. Even as the Dow went back to 24,700 at the end of the week, one of the major factors in the rally in energy companies has been, of course, crude oil. Now, here you see crude oil all the way back to 2008. You could see that collapse. That was called a demand-driven collapse. In other words, global recession. Here you've got a supply-driven collapse. Thank you, Texas. And God bless Texas. Okay. Supplying oil, it went to 27. Demand has been globally about 1% as estimated by some industry experts. And what we've seen here is a steady rise from $27 to $71 a barrel. What are the implications for investment strategy? Well, let's take a look at one way to get there. The blue happens to be West Texas Intermediate crude. The colorful chart are the price of the pipelines that, of course, transport that crude as well as natural gas. You can see that these two in percentage terms actually met each other at 27 a barrel and crossed each other at $100 in those extremes. You could see also that the pipelines lagged on the way down because oil led the charge. Now we've got oil at 71, and look at the dichotomy here. This index is priced for $40 a barrel according to our research. Could there be a gap closing there? It gives you about 100% gain potential, maybe as much as 130%. Of course, there's price risk and unexpected things could happen along the way, but we believe this high cash flow category could be your best inflation hedge for up to a third of the portfolio. This is just for fun. We went back, good bank, bad bank. Congratulations, San Antonio-based Cullen/Frost. I love Frost Bank. And here, they're hitting a new all-time high with distance. Part of it is the strength of the Texas economy. Part of it is the energy rebound. But manufacturing in Texas has been strong. Now, what's this chart? This, I would argue, Citigroup is a government-sponsored bank. And you can see something back here, 1987. Both of these charts are 20 years. You could see a nice steady rise to this point. That's when Saudi Prince Alawid was bragging about owning it at $500 per share. This is the collapse. And notice the recovery has been steady, but 500 versus 72. I'll take Frost's price appreciation from below 10 to 117 any day. So the Texas banks are not only back, in many cases they're very strong. Be careful if you choose what you think to be a blue chip, because it's not always going to work out. Can bond funds actually beat stocks over the long run? Well, the answer is in this chart. The top fund is actually a proxy for the global high yield and emerging market bonds. And you can see with dividend reinvestments, this white chart is 1,119% appreciation, and the S&P 500, even after this amazing rally, the S&P 500, 880%. This is if you reinvested your dividends over 20 years, and these two show that global high yield bonds can actually return over time a competitive return, if not better, in this case 240% better over the 20 years. And for a portion of the portfolio, of course, growth with income and safety and income, as well as the high cash flow category, that construction can be done for you. Come down to the Crescent, meet the team that cares, get a customized plan that takes your cash flows into account in a portfolio that is dedicated to being good in all three asset categories. I'm Spencer McGowan. Thanks for tuning in. Join us for more detail, including interest rates and inflation, which we'll cover in this weekend's program at NetWorthRadio.com. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.